Guys, let's get real for a second. Have you been on the wrong side of the market lately? In the video we posted on this channel about roughly 10 trading days ago, we have said something we have not said in about a year. We said that the market was going to rally. Now, for being a market crash channel, man, I hope you were paying attention because the market did go about 10 days consecutively in a row higher. But if you are a permanent bear, it may be a very difficult thing to handle because when the market keeps going higher, all you keep telling yourself is, oh man, well, sure enough. I mean, the things are so bad, it's about to reverse and go lower. And then it keeps going higher the next day. And you're like, man, well, certainly it's going to drop today. So on top of all the horror stories that you probably heard in all the media, what were they telling you in December? Oh man, it's a market crash. It's going lower. It's all kinds of crazy things about to happen. And it just seemed like the market just couldn't stop to go lower, lower, and lower. And at that point, more likely than anything, you were a bull. You were like, no, they told me. These CNBC guys, they told me it was going to be a rally. The Santa Claus. I don't believe in Santa Claus, but I was willing to believe in the Santa Claus because I really needed the Santa Claus rally because I was loaded on calls. And just when I lost my belief in Santa entirely, all of a sudden, after Christmas, the market started going higher. Man, Leonardo, just cut for all the BS. Tell me, where is the market going next? Guys, I have some bad news for the bears. Just when you're thinking that the market just can't go any higher after consecutive, pretty much non-stop 11 days higher, you're thinking to yourself, there's no way it's going to go higher one more day. And what does it do? It goes one more day higher. And when you're thinking, no way. There's no way it's going to go one more day higher after that. It has to fall. Don't it, Leonardo? It has to fall. You're the market crash guy. Please tell me the market is going to fall. Oh, man, I wish I could tell you that, guys. Here's the deal. In the video I posted roughly 10 trading days ago, we compared the market environment to that of February 9th, the week of February 9th, or technically the week following February 9th of 2018. It's clearly a typo, 2018. Saying the market had a high probability of going higher for the next 10 days. And so if you were to look at the chart, this is a 2018 chart, right? When the market dropped, we caught the bottom, boom, market moved forward that day. Consecutive moves higher. Look at all these white candles, right? And so we said, okay, out of the entire 10 days, the market only pulled 2 days lower. And that's exactly what we're getting now. I'll show you a chart in just a second. We're basically discovering there's actually a high probability of the market moving 2 more days higher before it's going to possibly drop and do this either 3 consecutive days lower. But there's actually a probability of something that most of the traders don't consider. Because most of the traders, they're simply trying to figure out, well, Leonardo, tell me, is the market going to go higher tomorrow? Or is it going to drop? Leonardo, tell me, what is it going to do in the next 2 hours? Leonardo, if you can't tell me where the market is going in the next 5 minutes, I'm unsubscribing. Because that is just unacceptable. What do you mean? You're supposed to know everything and you can't tell me where the market is going on in the next 5 minutes? Oh, I'm subscribing right now. Guys, just hold your horses, okay? I'll tell you exactly what's going to be taking place and exactly how you can play this market. So comparing the environment to that of February 2018. Here's what we got. Comparing the environment to that of February 2018, I want to point out a couple of things. That we actually had the couple of days lower in the 10-day sequence. They actually happened just a little bit earlier. And if you did pay attention closer to our videos and you did buy some calls, at the time I think Amazon was trading around $14.50 when we posted the video. We said it was going to go to around $16.30. Well, Amazon was trading today at $1,640 after actually yesterday hitting the high of $16.65. So I hope you took action upon watching some of these videos that we've posted lately. But if you did, look, this is what you could be doing next. I want to point out Because some of you might not have taken yet our divergences course. I'm going to give you a simple case of divergence that pointed out that the market was going to actually move higher before it reversed in December 26th. So here's what we had. We had a situation where, please pay close attention because this is important, guys, right here. RSI. Look, RSI hits a low of, about 15 back when? Back in October when the market started dropping. Okay, so in October we had S&P 500 trading around 2,700 and RSI was at around 15. Now, on December 24th, S&P 500 hits a low of practically 2350. Where's RSI? RSI is at like 16, 17. This is called a case of divergence. In other words, if the market dropped another 200 points, shouldn't the RSI be significantly lower? Well, it did not go lower. It was supposed to go lower because S&P 500 was dropping like a rock, but it did not go lower. So the general relationship is broken here. So RSI here again was at 15. S&P 500 was at 2,700, just above that. S&P 500 drops all the way to 2350, but RSI does not drop. It's supposed to drop, but it doesn't. So it tells you that a case of bullish reversal is developing. And if you're curious to learn some of the other factors we pointed out to this bull rally, you can certainly review the video we posted about 10 days ago. Now, there's some clearly, after a couple of days of the bullish reversal here, we're clearly seeing that the accumulation really starts picking up. Accumulation distribution really starting picking up, contributing to the bull case. Got a very bullish crossover right here on the MACD. Got a lot of bullish things, but notice, very importantly, today, when the market's actually trying to drop, look what happens. For the last few days, we actually had pretty decent volume on the way higher. And today, when the market is actually attempted to drop, look what we got. The sell-off volume was not as high. This is actually bullish. So at this point, what we're trying to say is that S&P 500, regardless of how many bears are out there trying to really wish that the market would just crash again like it did in December, it's not going to happen, guys. That's just the reality of things. And so there's a high probability the market first in S&P 500 will move to this blue line right here, which is going to be roughly 2630. Now, when we say 2630, it could get to like 2625 and go just slightly above that, 2635, before reversing the trend lower. Now, we got a surprise. It could be one other variation. A lot of traders, again, they think of markets as going higher, going lower, but they neglect one possibility, which is actually highly probable in this type of scenario. I'm going to reveal to you in just a second. So basically what we're saying, S&P is going to go to 2630 before the drop. Whoa, the drop. So the drop is coming. Man, we were worried about you, Leonardo. We're glad you're finally back, making some common sense. So you do think the drop is actually possible. Yes, I do, but not so fast, guys. Let me show you. And I didn't really post many videos lately, and I know this kind of looks like Christmas tree, so this should make up for the Christmas video I might have missed posting on this channel here for you guys. So here's what we got. This is not a Christmas tree, but it should resemble one after all the stuff I've done to it. It's Amazon, okay? And basically, here's what we've got. We've got a very rare situation, okay? Because all these pink dots right here, guys, this is basically a downtrend, a set of lower highs. This is a set of lower lows. But right now we're in a situation for the very first time in a long freaking time where we got a situation where we have a higher low at the same time as we're getting a lower high. So what the hell does this mean? Well, if you look at the diminishing volume on Amazon as it actually tries to make an effort to actually drop after a consecutive multiple days higher, it actually finds really good support around 1640 level. And if we continue to draw the trend lines, okay, Amazon is destined to go to about 1690, maybe 1705. So basically we're saying Amazon is going to go to 1705 before the next drop, or before the probability of a next drop could become very, very probable, because there's really a lot of bullish things developing here, like the MACD, the accumulation, everything looks super bullish. But including the volume. Look, in the last 2 days when Amazon tries to fall, look, notice there's a complete reversal of the trend. If you notice here, when it was falling on increasing volume. Then now it's actually been going higher on increasing volume, meaning the buy volume. And now that it's actually trying to fall barely, like 15, 20 bucks in relation to the $200-300 move higher in the last 10 days, like the volume is actually going lower as Amazon is trying to fall, which tells us that the actual move lower in the near term is really not in the cards. Now, it does not mean Amazon cannot drop like 20, 30 bucks and then bounce. Okay, we actually believe that Amazon will likely to hit this level of 1705. Now, again, when we say these levels, like you could hit 1703, 1704, right? You could hit 1706. So this is a rough approximation. We're not talking about a $20 stock hitting the level of 21 here. And when you're talking about stocks that are $1,000, $1,500, $2,000, I mean, it's going to be pretty much impossible to nail it down to a penny, but just give or take a few bucks. We're saying Amazon is going to go to 1705 before the drop because of the various scenarios here developing in our Christmas tree. Now, as difficult as it may seem to believe, the scenario is developing right now is a reverse head and shoulders, and we're thinking what's going to happen next could very likely resemble this scenario right here that was developing on between November 20th and like going pretty much all the way through November. We're expecting Amazon to actually Monday, as crazy as it sounds, right? Because it was trying to drop many, many times today. We're actually expecting Amazon to open up with a gap higher. In other words, it closed at about 1640, 1638 level. And we're expecting it to gap higher on Monday, which would mean Amazon would actually open up at about 1650, 1655 level. And then as long as it breaks about 1665, we should see Amazon hitting the level of 1690, 1700, literally in Monday, Tuesday. Okay, so there it is. You got all the details. Now, one of the things that we described in the video posted 10 days ago was the fact that we were noticing the entire market crash in December was taking place due to the crazy volatility in the oil prices, which caused instability in the stock markets all around the world. Now, we're seeing that this is temporarily on pause. And as you can see, the same divergency is observed in the price of crude oil, WTIC, okay? You got the situation where crude was falling to a level of 50 in November. Notice where the RSI was. It was getting close to like 13 level. Now, then oil dropped significantly lower to a level of 42, 42 and a half. Observe that the RSI actually did not move lower, which it should have. It actually moved higher. So that was actually pointed, that was just one factor that was pointed out to a breakout higher in the price of oil. So it actually went from 42 to 51. Now, observe what actually took place today. And this is actually partially one of the reasons why the market was so hesitant to move higher. S&P barely squeezed out like a gain of about 1 or 2 points. In the morning, it was dropping. It was dropping yesterday. And yes, in the video that we placed 10 days ago, and here we described that the most important factor about the market environment after February 9th, where the markets were consecutively going higher, was the very fact that every day the market would actually open. It would not open initially higher, but it would actually grind its way throughout the day higher. And so if you were trading the last 2 days, today, which is January 11th, 2019, and yesterday, January 10th, 2019, you would have noticed that the market was dropping initially in the morning, and then it was going throughout the day, creating a very solid uptrend, moving higher. Coincidentally, that is exactly what oil has been doing. But all of a sudden today, we're getting a reversal in oil, right? So now it's hitting the level of 52.96. All of a sudden, we're getting a bearish candle. Now, generally speaking, most of the short sellers will be like, oh yeah, let's short the hell out of oil now because it's still bearish, because the volatility is still high. We're saying, look, actually, we don't think oil is going to go much lower from here. And if you're observing all the headlines today, oh man, oil, Russia, OPEC, to try to make a deal with the United States, all kinds of crazy talks going on. Look, oil is about to go higher despite of this red candle. Where do we think oil is going to go? Oil is fixing to go to about 55, 57 and a half is what this little arrow is trying to portray. Now, it does not mean that oil is going to go to 55 Monday or Tuesday, right? It means that this reversal right here. Basically, the inability of oil to break above this level yet is just temporary. Oil may be going sideways for a few days before actually making another attempt to break above this level of 52 right here. There's plenty of things to support it on this chart right here. So what we're saying, as far as chart's concerned, that there's a reverse head and shoulders where we're indicating oil can go sideways for a few days and then ultimately break out higher. And once oil breaks out above this 52, 53 level, I think we're going to see some buyers coming in, even on heavier volume than we observed between the level of 42 and 52 right here. As stated in the prior video, okay, this is actually a positive for the market. The last thing that I want to bring your attention to is the VIX. Now, whoa, what has happened to the VIX? Man, what's going on here? Look at this. It was just at 36 on the 24th of December. Now we're at 18. Wow. Why would we be saying that the market could still go a couple of days higher from here? Well, because we believe VIX is actually going to touch this level of 1665. Again, it doesn't have to necessarily hit exact number. It could actually go all the way down to 16. It could stop at 17. So roughly in that area, we're thinking that the VIX is going to finish its traveling all the way from 36 all the way to about 16, 17 range right here. So we still got a little bit of leeway on the VIX to go lower, which will coincide with this major support line on the VIX of around 16, right? So this is where it stopped last time, the prior time, and the prior time before. Now notice what the VIX has not done in a while, which is a typical characteristic on the VIX. VIX generally likes to go sideways unless something crazy is happening in the markets. If you will examine the VIX environment around August, September, right before we had to the October drop-off, right? And for those of you who don't know what VIX is, you got an inverse relationship with the market. So when the VIX goes higher, markets actually go lower. So when the VIX goes sideways, actually creates a pretty stable environment. And just observing the fact that the VIX could be going sideways actually creates a better opportunity to profit from trading stocks and options on the bull side, meaning like buying call options opposed to continuing to buy puts. So as you can see, VIX likes to go sideways for quite some time. Once it breaks out here, VIX goes sideways again. And so now that it's made this pyramid top right here, there is a great probability after it hits this level of 16, 17, what is VIX going to do? It may resume this trend sideways. Now, if VIX is going sideways, what is going to be happening to the markets? If VIX is going sideways and oil continues to improve and go higher, oil volatility is actually going to decline, which will create more favorable market conditions for the market. So if oil goes sideways to higher, VIX goes lower to sideways, that actually means what's going to happen to the actual stock market? Well, the stock market will have a very high probability of going sideways. So we're not necessarily expecting a huge drop because clearly when we're looking at Apple, when we're looking at Amazon, we're looking at some of the key stocks, we're noticing institutional investors are clearly buying. They are buying the heck out of these stocks. And so when institutional investors put millions and billions of dollars, it's going to be very unlikely for the markets to experience the same kind of drop that you have witnessed in December. So being a bear right now simply does not pay. So what does pay? Here are the key takeaways from this video, guys. Just when you think that the market cannot go higher any longer, it will test you to the limit. And in our view, it actually has the probability of going higher to a couple more days, 2-3 more days, okay? And then it will cause you to actually lose your short positions. And as soon as you do it, it will actually reverse and go lower. But this time, it's actually likely to do nothing. There's actually a high probability of the markets going sideways until next Friday. And here's what we mean by that. Next Friday, there's going to be some key stocks announcing earnings. JP Morgan, Bank of America, Wells Fargo, and most of them are going to be announcing earnings either Friday or Monday. And the most important observation is going to be this. As you've seen for the majority of the 2018, every time some great stocks were reporting earnings, what was happening to them? They were actually, after reporting great earnings and beating analyst expectations, what was happening to them? Guys, come on, you should know this. If you were trading all the great stocks, the reported earnings that were supposed to go higher on great news, they actually dropped. So the key of observing these key stocks right here at the beginning of the earnings season, if JP Morgan, which should beat analyst expectations, no problem, if it actually drops and you see that institutions are coming in and they're buying the dip, that tells you that the market ultimately will break out of the sideways pattern and will actually even go higher. If Bank of America does the same thing, it confirms the trend. So we could be heading actually into an earnings season where buying the dip will be back in fashion once again. And I know you're thinking, man, something is wrong with you, Leonardo. You turned from a market crash guy. You just sound like a bull. That's it. I can't listen to you anymore. I'm unsubscribing right now. You know, as a matter of fact, just email me when you turn into a bear again. Guys, I feel your pain. I know how you might be feeling if you've been short in the market for the last 10 days. All you had to do was watch the video. Because we warned you the market was going to rally. And we warn you once again, do not try to mess with this market. Do not try to short it. Right now is not the time. Just think about it. When the market crash guy tells you to buy calls, after for 6 months he's been telling you to short the tops and buy puts, don't you think that's something that you probably should be paying attention to? Guys, I wish you the best. If you're trying to learn more about stocks, chart patterns, if you're trying to figure out how our 13 markets move formula works and all that good stuff, just click the links below. The easiest thing you can do is schedule a 20-minute, 30-minute free consultation with myself or a senior trader here and get all your questions answered about trading options, trading stocks, anything about trading. Schedule it. Get your questions answered so you can make your 2019 your best trading year ever. I'll catch you guys in the next video.